What's going on, traders? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is March 16th, 2022. Please go ahead, click the like button on this video and subscribe to my channel. That way you don't miss any of my future market recaps. Today we're going to talk about the price action in the indices. We're going to talk about Fed Wednesday, some of my trades for the day, and finally some nice green price action. My trend model actually flipped to a +3, which is awesome. Before we dive into all of this, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire trading account to any one of my trades or anyone's trades for that matter. Oh my gosh, let's take a look here. So we had a huge gap higher in the market into Fed Wednesday, and we ended up sticking the landing, team. So check this out. S&P 500 finished up 2.22%. We had the NASDAQ QQQ finishing up 3.71%. IWM small caps finished up 3.15%. Dow Jones up 1.54%. And we had the ARK Innovation ETF finish up 10.39%. This is insane. Like, this ARK ETF, on average, the S&P 500 advances about like 6 or 7% per year. This ARK Innovation ETF moves in one day, it can move just as much or more than the S&P 500 moves in an entire year. Pretty crazy. Volatility got absolutely crushed. You can see all these volatility indices trading much lower. Everything closed at the very high end of the daily range, and breadth was superb today, with 89% advancers in these small caps. So everything went well. Take a look at this Finviz heat map. We had Apple up big, Microsoft, Google, Amazon, even Facebook, Tesla up 4.78%. Take a look at the laggards. We had the defensives lagging behind, which is good. We had healthcare, which is another more defensive area of the market, lagging behind just a bit. And we had energy stocks also lagging behind. Utilities as well. So really, like, all of the areas everyone was like hiding out in because, oh my gosh, this is such a horrible market, those areas of the market gave back some gains, and all of the more risk on stuff actually had a nice healthy advance today. Take a look at our sectors. We had the solar stocks, which are now in our top momentum slot, up 6%. We had transports that moved into our number 2 momentum slot, up 4.11%. And you can see towards the bottom of this list, we had the ARK Innovation ETF up about 10.39%. But yeah, the big mover for today, these Chinese internet names. Look at this KWEB ETF. It was up 39.72%. This was a phenomenal advance. And the Chinese government, they put out, there were some headlines overnight basically saying like, hey guys, we're going to do whatever we can to stimulate our financial markets, make sure our market is good, etc., etc. Oh, and our crackdown on these big mega cap tech companies is essentially over. So whatever that was, that really triggered just this sharp move higher in these Chinese internet stocks. Let's actually take a quick look at those. And of course, that's really just the narrative that you get after the fact. There was obviously some big money that was, for whatever reason, moving into this space. There was those fears from the other day that, hey, maybe the Chinese are helping the Russians. What I'm assuming is that whatever smart money is out there that started dumping these Chinese stocks, thinking, hey, these Chinese stocks could get delisted, that led to this big drop in early March. I'm assuming that those powers that be finally got like the green light or the heads up that, hey, China is not working with Russia. The United States has no plan to delist these things. That's honestly what I think could be playing a big part in this. But keep in mind, after a 40% increase, this KWEB ETF, it's only trading up to the 20-day simple moving average. Pretty bizarre stuff that's going on. But look at this. This advance came on high volume. Really nice move today. All right, let's take a look at our style factors. You can see style factors. We had the high beta stocks up over 4% today. We had growth stocks up 3.28%, momentum up 3.48%. So yeah, just a really nice move across the board. One thing I do want to touch on heading into this Friday. This Friday's quad witching. That means individual options are expiring, index options, individual futures, as well as index futures, all expiring on the same day, which is this Friday the 18th. We have $3.3 trillion of option notional that is expiring this Friday. So really, what does that mean? It basically means a lot of the moves that we're going to see between now and Friday are not going to be like, hey, fundamentally, I think this is a great company, let me buy it. Hey, fundamentally, this is awful, I'm going to sell it. A lot of it's just going to have to do with all of this positioning that needs to be reshuffled. There's going to be a lot of mechanical movements in the market, so we might see some things that are kind of surprising, things that don't really make much sense. So I would say until Friday, really just expect the unexpected. And take a look, the market is actually following this seasonality almost to a T. Look, we got to mid-March, and mid-March is the seasonal bottom in the market. And now the market is just starting to advance higher. So let's go to the S&P 500 and we'll briefly talk about what happened for Fed Wednesday. So the market got a big gap higher and we got some big intraday moves. You know, it looked like we were going to retrace all the gains. We had a big intraday shakeout today. My trend model did flip to a +3, which is awesome. So that is where I want to be the most aggressive in my trading account. Take a look at this. So in one fell swoop, I mentioned the other day, hey, we got back inside of this weekly value area. This targets a move to the top of the weekly value area at 42.79. Well, we went all the way through it. Then we hit this R1 pivot and then some. So what I'm assuming could be happening today is, you know, first and foremost, the market sentiment has just been so negative. If we zoom out to this weekly chart, we've had 10 weeks of selling in the market. This has been a 10-week long downtrend. And at some point, these investors have to run out of ammo, at least temporarily. Like, for instance, the coronavirus crash, which was just such a huge market meltdown, that was only 5 weeks. So that's just for context in terms of just how long the market has been in a malaise. Take a look at this, though. On the weekly chart, we actually started moving above this teal trend line, and we defended the yearly point of control at 41.86. So anyway, Fed Wednesday comes. Everyone knows the Fed is going to hike interest rates by 25 basis points. That was already priced into the Fed fund futures. Of course, they went ahead and did that. They did a 25 basis point rate hike. And then they said, hey, in the future, we're going to have to do a balance sheet unwind. They didn't get into the specifics of when they are going to start that. But Powell in his press conference did say it was going to come a lot faster than the last tightening cycle. It's like they're going to roll off the balance sheet very quickly, which doesn't make sense because the last time they tried to do this, they essentially blew up the entire market. But anyway, basically, the Fed didn't tell us anything we did not already know. So everyone has been freaking out about the Fed for literally 10 weeks straight. So now that we got the finality of the Fed meeting, the market had a bit of a relief rally. And I'm sure there were a lot of hedges that went on that were specifically for Fed Wednesday. And when nothing blew up in the market, suddenly you have a short squeeze. Suddenly we're starting to get better noises on what's going on with Russia and Ukraine, chatter of a potential peace offering, whatever that might be, better news on China. So yeah, we just got a big move to the upside. So yeah, my trend model is at a +3. Dark pool buyers have been accumulating equities ever since January 26th, right around here. So yeah, all systems go. That being said, on this hourly chart, we're already overbought. We're at this Venom R1 pivot, so it's pretty important for me. I don't want to go and like, let me start loading up on everything right here. I definitely want to be a little bit more tactful and not just like, all right, now the market's up 5% off the lows, let me just like buy calls. Like, I want to make sure that I'm pacing myself. But yeah, really nice action overall in the market. Let's take a look here. And let's check out some of my trades for the day. So I actually did quite a bit of trading today. And I had a pretty nice trade on the short side of the market. These gaps higher, they can be very difficult to trade because you come in, the market opens and it's up big. It's already up like well over 1%. It's like, it gets tough to add new positions into that intraday. Because a lot of times you try to add something and then the market pulls back and suddenly within minutes you're underwater. So what I love doing is actually shorting into these gaps higher. Even if I'm bullish on the market, I will do that just as an intraday trade. So yeah, I had a bunch of exposure coming into the session, and I wanted to take this gift of this gap higher and really just reduce a lot of my options exposure. So I closed out some SPY calls I had for a nice winner. Closed out an additional tranche of SPY calls also for a winner. I had some Qs calls, closed those out for a loser. Really just trying to like clean things up. Hey, we got a nice move higher. Let me just clean it up a little bit. Let's take a look here. I bought some April 1st puts, 431 puts on the S&P 500 for 930. And then I did some trading around this. So I closed out half of them for 10 bucks. So a nice little winner within, 15 or 20 minutes. Then the market moved even higher and I reloaded on those puts. And I added to them for $8.40. So I had an average cost of $8.85. All of a sudden, I go, okay, I'm not going to do anything into Fed Wednesday, whatever. I'm going to go to the gym. So I go to the gym, and the market was like so stubbornly bid. We actually had a pretty big pullback when I went to the gym, so I was able to close those puts out for $14.40, and I'd paid $8.85. See, I had a nice winner in those, and I was like, hey, I'm going to take advantage of this winner. I'm actually going to go ahead and clean things up a little bit further. I had these CrowdStrike April 14th calls, and I closed these out. CrowdStrike, I must say, this was my one trade that by the end of the day, CrowdStrike ended up closing just fine. But what I will note is that while a lot of these other growth stocks were really like zooming higher, CrowdStrike was only up 0.54%. So I don't know if it's just part of like the unwind of a lot of these exposures people had for the war. Cybersecurity stocks, let's just sell those off. I really don't know, but I want to make sure that I have my money in things that are trending very strongly. So I was like, let me just take off CrowdStrike, took that one off. So yeah, cleaned things up a lot, consolidated a little bit, and had some nice day trades in there. Take a look at what's going on, like Upstart, for instance. This one, I added a position here, I believe it was yesterday. Added to my position. This one's now above this monthly point of control. Take a look at these solar stocks. These are really shaping up very nicely, up 6%. And now these are starting to enter sort of like a healthy uptrend here. We have a bearish to bullish trend reversal going on. And let's take a look at the semiconductors. These were up a healthy 5.15%, also jumping back into value. So I would say, the theme for today is, hey, this is a great start, awesome. We kind of like turned the tide in the market. But I think for me moving forward, the question is, after a nice move off the lows, how much more can we expect? There's going to be a lot of inflows coming into the market for month end. Remember, the seasonality into month end is great. So I'm prepared for a nice rally into April. But beyond that, once those rebalancing flows are kind of out of the way, we still have this Fed tightening cycle ahead of us. So it's definitely important. The price action definitely getting a lot better, but it is also important to not lose sight of the big picture. With that being said, that about does it for this market recap video. Awesome to see a little bit more green on the screen today. Hope you all had an awesome trading day, and I'll see you all tomorrow.